Geek Lad, can you verify we're on X and YouTube?
Yeah, we're live on both.
Wait.
Bootcamp is about to begin. Rise up, it's time to log in. LP Army will teach you the way to be LP warrior starting this day. We live for the fees we make. Soon it is profits that you will take. The LP Army marches strong. The best in soul and we sing our song. We live for the fees we make. Soon it is profits that you will take. The LP Army marches strong. The best in soul and we sing our song. We are LP Army, rise to the sky. Dynamic fees, our battle cry. LP warriors will never die. Bearable we will fly. Rise, new soldiers, rise. Rise, new soldiers, rise. Spot, could ask, use them all. Winning's the task, we heed the call. Boot can't join our ranks so tight. Listen to the Goose Gang and gain your might. We will print and we will earn. Points to gain as tokens burn. Join the ranks of the brave and bold. Story of the LP Army told. We are LP Army, rise to the sky. Dynamic fees, our battle cry. LP warriors will never die. Bearable we will fly. Rise, new soldiers, rise. Rise. Take the course and earn your role. March with us and earn some soul. Dodge the rug and join the fight. We gain together LP Army might. Make your position and join the pool. Poach your wins with Alex's tool. LP Army, we fight to win. Your journey is about to begin. We are LP Army, rise to the sky. Dynamic fees, our battle cry. LP warriors will never die. Bearable we will fly. Rise, new soldiers, rise. Take the course and earn your role. March with us and earn some soul. Dodge the run and join the fight. We gain together LP Army might. Oh!
Hell yeah, guys. All right. So, hope you guys enjoyed that. And gonna turn it over now to Mario. Mario is your instructor today. I hope you guys enjoyed that song. Mario, take it away, man.
Yep. Just to confirm, you guys hear me okay? You can see the screen now?
I can hear you and see the
Okay, just give me a second. Okay, so you guys see the presentation now?
We sure do. We see the
Okay,
disclaimer.
perfect. Yeah, so let's start with that. Obviously, you should do your own research before doing anything, but let's just quickly go over this. So the content in this presentation and throughout this course is for informational purposes only. The information herein should not be construed as financial advice. The instructors are not financial professionals, and any investment or positions you open, you do so at your own risk. Any funds you invest should be funds you're willing to lose. By entering this course, you agree to these terms, assume all responsibility, and agree to hold Meteora and instructors harmless for any loss of funds. Do not continue with this course or presentation if you do not agree to these terms. So what the prerequisites for today's course, we will assume that you've agreed to the terms and conditions. You will need a Web3 wallet app that supports Solana. We recommend Phantom Wallet, Backpack, Soulflare, all of those are good options. You will need a wallet account funded with 1 Sol to follow along, and you should be prepared to lose before you win. Here's my quick introduction. I'll keep it short. My name is Mario. I've been in crypto since 2011. I've mined Ethereum, entered Solana during the NFT craze. I'm a Goose DAO member, as well as LP Army member, and I've been doing DGen DLMs on a daily basis. So this is what we'll be covering today. We will try our best to teach you how to find the opportunities to LP into. We'll teach you basic chart reading and LP strategies. We'll also show you exercises, hands-on activities, and demo to help you understand these better. And we will show you how to complete the test to graduate and become LP Army Private. We will also dedicate the time for Q&A, so you can feel free to use the Zoom Q&A feature during the whole bootcamp. And at the end, we'll try our best to cover your questions. So to get the most out of this, you should use the Q&A feature, as we've said. You should learn by doing. You should follow along when we tell you to do so, because it's easier to understand when you're seeing the numbers change on your own screen and see how it works in general. And after the bootcamp is done, you should follow up in Discord. You should also hang around with us in there. So feel free to give your feedback and let us know what we can improve for future sessions. So let's start with providing liquidity to a DLMM pool on Meteora. When you provide liquidity to a pair of tokens in a DLMM pool, you're essentially swapping the asset in the pair constantly as price moves from bin to bin. For each swap that happens within your pool, you're also earning a fee. This means there are essentially 2 goals you can utilize DLMM for. You can achieve a positive return from divergence loss or achieve a positive return from fees. So when you want to provide liquidity, you'll have to keep these 2 goals in mind and focus on either of them or both to optimize your LP earnings. Just give me a second. Some important things to consider when DLMing are basic price theory, so support and resistance areas, price events like DevSell, political events, major crypto events, etc. And you should always use on-chain tools to back your analysis with real-time data. Let's move on. So first, we will cover how to achieve a positive return from divergent loss. To achieve a positive divergent loss is when your withdrawal consists of a higher USD value compared to your deposit, excluding the fees. The way you can obtain this is by selling one of your assets in the pair for a higher price than you bought it for. For example, a one-sided pool with none of the assets in the pair, essentially DCAing yourself out of the price range, earning you a positive divergent loss and some tasty fees. Some important things to consider. You want the price ratio to go up, kind of like spot trading if your quote is USDC, but with benefits. You swap your liquidity at the exact price ratio you desire, and you can utilize DLMM to cover your exact analysis of any market. So let's briefly cover what this means. For example, if you bought some SOL and you want to DCA out, as you can see on this chart, you want to sell your SOL at a higher price. Basically, you can set up a position that will sell your SOL at a certain range. And if it keeps ranging it in that range, it might be even more beneficial to you than if you simply swapped, because you're getting fees every time it hits your bin. Another way to make profit is achieving a positive return from fees. Your fees earned throughout the DLMM position will solely rely on the amount of volume your position has done, because when providing liquidity, you're earning a percentage of the volume made with your liquidity through the base fee of the pool you've provided liquidity to. The most important parameters there are when it comes to choosing pairs that can generate you the most fees are volume, liquidity, and volatility. Some important things to consider with this. Your exact return from fees will be the amount of volume your liquidity has captured multiplied with the dynamic fee. So you won't be making any divergent loss if you go one-sided. So you will not get any profits from token appreciation, but so you will only earn from the fees. And you want to allocate most or all of your liquidity at areas where there is most volume, for example, at support resistance areas or some psychological price points. Providing liquidity to markets. Generally, liquidity providers have wanted price to be more or less stable in order to prevent divergent loss from price going out of range, concentrated LPing. But why and how you can utilize DLMing for more volatile markets? This ultimately depends on your goal when providing liquidity. So we can cover that with some live demo. Just let me switch my screen. Do you guys see my screen now on Meteora?
Yep.
Okay, perfect. So for example, let's take Sol USDC. As you can see, we have a few pools that have a lot of TVL. The way you would choose this is based on your theory, what the price will do. If you think the price will range, I would go for something tight. If you think it will dip too much, I would go for a wider bin step. Basically, with a wider bin step, you can cover a larger position with a larger price capture. Like I started here, so you can capture a larger range of price with one position. So, for example, let's take this pool. If I thought that Sol would go up, but I also wanted some fees, what I would do here, I would go one-sided, for example, with half of my Sol. I would set it, if I thought the price would hit 170, I would set it up like this, and I would put half of it in spot, so I get some fees because it might range in here and you want some fees. And then I would add another half in bid ask, so I essentially DCA out as the price moves up. So that's one of the most used strategies because it allows you to capture the fees as well as getting enough profit from divergent loss, which is positive in this case. So if you thought that Sol would go down, I would use USDC and do the same, but I would do bid ask and essentially buy it at a lower price. So you can cover multiple, whatever you think market will do, you can make a DLMM strategy for it and kind of be a bit safer than if you only bought it, because the fees usually cover some of the IL, and in some cases they cover it completely.
Hey, Mario. This auto, you might want to slow your mouse movements down. It's quite hard to follow. Maybe it's something to do with the Zoom updates or something like that, but it's kind of hard to follow what you're talking about with the mouse.
Yeah, give me a second. I might change my pointer speed. Yeah, it was the pointer speed. Is this better?
Yeah, that's great. It was just,
okay, nice.
It was kind of out of sync with what you were explaining. You know what I mean? I think it might have just been the update refresh rate or something.
Okay. I'll try to slow down. So let's go back to the slides. Finding LP opportunities. These three are the most used tools. I personally prefer using MetLex Top 100 tool. It shows you the top 100 pools on Meteora. and you can choose the one that you like. You can filter it by fees and volume. The other one is Dex Screener. I like to check the top 30 coins, see what's trending up, and choose that one. And there's a DLMM Ops bot on Discord that shows you good opportunities, good plays, and you can filter it by Degen plays, blue chip. It's pretty good if you're just beginning. So I'll start with showcasing you the MetLex tool. You go to metlex.io. There is a DLMM 100 tab. You can filter it by the base fee. I like to do 5% and filter by volume, 5 minutes greater than 0. It will show you all of the pools with activity in the last 5 minutes. So you can base your opinion by the volume and the amount of trades the pool has had. You want to capture, like you want to have at least some trades on both sides, so some buys, some sells. You don't want to get into something that's only getting arbitrage trades. So for example, what you would be looking here for is maybe 15, 20 trades in 5 minutes and a bit more on 1 hour, but going both ways. You can, so if you're DLMing something new, for the first 30 minutes to an hour, I would suggest you to only be in 5% base pools. That way you're minimizing your losses. And after the coin graduates, kind of, I would move to 2% pool. So I like to do 2% starting from 1 hour to maybe 12 hours of token age. And only after that, I go for 1% pools. So at the beginning, go for high fee, and you might earn more, but you will also lose less. So it is a good option. So next thing is Dex Screener. I like to go in and check the top 10 coins. As you can see, this one is looking pretty bad because it's only going up. You want something a bit older. This one has fake volume. You can notice that by these pretty much symmetrical volume patterns. This is usually an indicator of fake volume. They pump the volume to get the token ranking up. And at one point, they simply rock the chart completely. So I skip these, the charts that look like this.
Is that called wash trading?
Yeah, that's wash trading, basically, where they buy and sell the same amounts of tokens. This time they're doing it with small amounts, but they can sometimes do upwards of 200, 300K volume in 5 minutes. And while it does look pretty enticing to LP, none of that volume is routed through Meteora pools. They go through their own pools that are cheap to wash trade in. So I would completely skip this. If you see a volume pattern that looks like this, just skip it until you know what's going on, because sometimes wash trading can be used as a way to promote a token, kind of, but it's usually an indicator that the coin is up to no good. So as you can see, this one also has the same pattern. This one as well. Weekends are usually full of these fake tokens. So if just take more caution on weekends. This is yeah, sorry.
No, well, and like I guess you can also use like looking at the wallets that are doing it, right?
Yeah,
That's
absolutely. You can check the wallets. They usually buy and sell in the same block. And there are like big wallets that hold a large amount of supply, but they're split over 20, 30, 40 wallets. So using rug check and stuff like that, you won't notice anything bad until they pull the trigger. So this is what a kind of genuine volume profile looks. So the peak is when the coin launches, and then it's kind of going up and down. So this is something that you could LP, but you have to take care when doing meme coins, because those are the riskiest and you can lose the most. But this is something that I would perhaps take into consideration. So what I like to do is check this tab trending and scroll down to see the new coins that are popping up that are like less than an hour old. Sometimes you can find good plays in here, but as I said, this is one of the riskiest strategies that you can do, but it is one of the most profitable, if not the most profitable. So if you want to try to give meme coins a try, I would suggest you to take a minimum, maybe 0.1, 0.2 sol, and see what you can do with it. Definitely do not start with any higher amounts, because it is very easy to lose out. So I like to open these and then check them out. For example, this one hasn't logged the liquidity, so I would skip that as well. There are just so many factors that you have to take into consideration with these. But if you're interested in doing meme coins, and if you find something on Dextrine or on Metlex, feel free to post it in our Discord and show off your curves and tag some of us. We will help you understand the chart and tell you if it's a good play or not. Because usually if you're thinking about doing it, there's already someone doing it before you. So it's always a good idea to share. As for the LMM bot, it's pretty simple. It's in a separate channel in Discord. You can check it out. I don't think there's much to show about it. So reading the charts, you have to learn the basics of reading the charts if you want to make the most out of this. I will take, for example, this coin. So you want to decide which way do you think the coin is going? Is it going up? Is it going down? Or will it range? You can use some indicators to help you out with this. I like to use volume profile, fixed range, visible range, this one. So with volume profile, visible range,
Mario, you said something super important there, which is at the beginning you have to figure out which way whether you think the price is going to go up, go down, or stay in the middle.
That's why.
And
that's why we need these indicators.
Yep, and just to connect the dots for folks who might be beginners, Mario's really advanced. The reason he said that is that will inform the type of strategy that you use, and Mario's going to get into that in more detail. But the whole idea is that you want to select from a toolkit of different strategies and sort of develop your own strategies that you like with these different price dynamics that you expect. Is that right, Mario?
So yeah, that's correct. But this is like something that you should do on any coin other than Sol USDC. Even if you believe in it, you should always back it up with on-chain data. So with this volume visible range, you can see the volume in the range. So you can see where the most volume happens, in which range. And usually when there's volume happening, that's usually a nice point to LP. I also like to LP psychological price points. So for example, if a coin is at 1.5 million market cap, if it dips down to 1 million, there's going to be some action there, because people usually like to take those points as kind of support. So you don't want to be stuck in a coin that's not doing volume, because the volume is essential for making those fees. So it all depends on your strategy. But for example, this coin, you can see that it has had a big pump, then it dipped a lot, and now it's kind of recovering. But this is something that's super risky. I'm just using it as an example. So judging by this chart, we can see that it kind of found the bottom right here and then started its way up, and now it seems to be ranging. However, the volume is pretty low, as you can see, 1 hour 31K volume. So Best case scenario, our pools could capture maybe 10% of that, and I don't think the coin would be worth LPing. So it's really hard to find good opportunities nowadays. So you really have to take a lot of care when doing this.
Hey,
And
Mario.
we can you yeah, go ahead.
Well, just folks are asking those yellow and blue lines that you had there, if you can go back. They were wanting
Yeah,
to know
sure.
exactly what the horizontal yellow and blue lines were.
It is the volume profile visible range. It shows you the buy and sell volume in the range on the chart. So it's a pretty useful indicator. I prefer to use like that and the volume indicator in general, because I only care about volume of the coin. Usually when volume goes down, that also means price will go down, because people are in it for, quick gains. And when volume starts going down, that's usually the earliest sign that the coin might be on a decline.
Yeah, so basically it's a histogram and it's flipped sideways, right? So normally when you look at a histogram, you're used to seeing it horizontally. So it's a vertical histogram. So you can see where the red line is right there. That's how much volume there was for that price, right? So you can see the price was about 0.001199. And so at that price, we had the most volume. And I believe the yellow and the blue indicates buy and sell.
Yeah, they do. So we haven't covered how to choose the right pool. We did briefly talk about it, but let's take this coin for example. I also want to add again, I would not suggest you to LP this token. I do not think it's a good play. I'm just using it to explain to you how it works. So when you're finding a pool, you go to the LMM tab. You can paste token name, symbol. I prefer to paste the contract address because that's the safest way. Sometimes you can have multiple tokens with the same name. So as we can see, this one has 5 pools. It has a 2%, 1%, 5%, and some different bin steps. So as I said, for the first, if you're going in early, you only want to do 5%. But this token has now kind of graduated. So as we can see, there's some TVL in the 2% pool. And as you can see, it's doing pretty well on fees, but the risk is also quite large. So as I said, if you're doing something risky, stick to a higher fee because it covers your losses more. But if you're doing something that's older, like for example Bonk or something like that, that's actually a good project, you should go for a pool that has the most TVL and volume. Because those are usually the best. As you can see, this one has 1.1 million for Bonk, 25 bin step, 0.25% fee, and it had 2.6 million volume in 24 hours. But the 8 bin, 0.05%, with almost 10 times less TVL, has nearly the same volume. So the right pool depends on your strategy and on what you're trying to achieve. If you think that the coin will range in a certain range, you should go for a lower fee, as is example here, because you will get more trades and more volume will be routed to your pool. And you make money when volume is routed to your pool and your liquidity is used. So advanced DLM strategies, we have 3 strategies right now. There's spot, curve, and bid ask. You can combine them. You can go one-sided, and right now we got one-sided withdrawals. So we can make some pretty advanced strategies. Let me go back to Meteora. So if you want if you think Bonk would dip, I would do something like this and make a bid ask that would buy the most Bonk there. But also one thing that we now got is one-sided withdrawals. So if it comes to here, for example, to this point, you can withdraw just your bonk and put it back in a bid ask the other way. So essentially, when price goes back up your range, you're selling more bonk at a higher price than you bought it for. So you're making money on fees as well as on token appreciation. If you want to go for something short term, you can go for a narrower bin step, something like 25 to 80. But if you want to leave your position open for a longer time, you really have to go for a wider bin step, something like 80 to 125, because that covers a wider range. Because if you go for a tighter bin step, your position will need more attention, and you will have to rebalance it more often. So did we have any questions regarding what we want to show?
Yeah, we did have a pretty good question about the, $700 being a low TVL, and I think one thing that's important to note when you're doing the overall sort of analysis of a coin, you want to do it in the radium pool, right? Because the radium pool will be where the token graduated, where it launched. That's going to be where you have the most volume. You don't want to be doing analysis on the DLMM pool because those are going to have less volume than the token. So you can see Mario here is looking at the radium pool to do his analysis.
Yeah.
Absolutely. And that's the pool that has the most volume.
Token, if the token is launched on Meteora or on Moonshot, the main pool can be on Meteora. So you want to make your analysis on the largest TVL pool, which is in 98% of cases on Radium as of now. So you should always do your math there, because if you do it for a pool, let's go back to the pool. So clicking on this tab, deck screener, it will open the pool tab. And as you can see, the volume here is a lot different than the volume in the main pool. It can be because the pool is not getting trades. It can be because there is not enough liquidity in this range. Sometimes, even though there is liquidity, it can be in a different range, so it's not active. So you should base your analysis on the main pool, whatever it is. And as for TVL, if you want to get organic routes trades from Jupe, you need to have more than $600 of TVL in the pool. So anything above 600 is okay, but a general indicator is if a pool has this little TVL, that means it's not really performing that well. So you should avoid anything with as a start. I would avoid anything with less than maybe 3-4K, even if it's a fresh meme. If there's too little volume, too little TVL, if the token dips, for example, here, it can quickly go under $600 and it will not get organic trades from Jupe, only ARB trades, and those don't really happen that often.
That's perfect. Thank you, Mario.
Okay, so just checking the questions.
I was trying to answer. There was a question about the difference between the volume below and the vertical volume with the yellow and blue. I started trying to type the answer and accidentally clicked answer live, so I guess we'll answer it live.
Yeah, do you want to go for it?
Yeah, so the bottom volume is giving you volume over time, right? So that's like a time series of volume. So, whatever time period you're in, if you're in a 1 minute chart, it's telling you what the volume was for that 1 minute, on the horizontal axis. On the vertical axis, it's telling you what the volume was for each price point, right? So, when we looked at, maybe you can pull that chart back up, Mario, with the volume profile indicator. So here it's telling us how much volume there was for each price range, right? So because you've got price on your vertical axis, and it's telling you for each price point, or for some range of prices, how much volume it had. So you can see where that red line is. That's where we had the most volume at that particular price range. So, and the reason you want to do that is because you want to provide your liquidity where you're getting the most volume. Now, this is showing it for the entire visible range, right? So a lot of that volume took place early on the token launch. So if you want to see where the volume has been more recently, you can zoom in the chart so that you kind of get rid of that early volume, right? So now Mario has zoomed it in. Now we're looking at more recent price action, and you can see now that the histogram, the vertical histogram, has changed. So, and now our red line, right, where we had the most volume, has changed to a different price. So
Yeah, and as you can see, the price is ticking generally in the area where there is volume. So it's a pretty useful indicator to use. There's something I want to showcase that I've learned sadly too late. So with these indicators, when you have them, you can, for example, the volume, it is usually on the bottom, but you can't really scale it, and it's weird. You can hover over it. There's three dots, and you can move it to obtain above or below. Then you can scale it to your liking and zoom in on it separately. So it's a quite neat feature to use. It makes your charts kind of less cluttered. You can see what's going on more easily. Also, another useful feature is you can swap the price of the token to Sol, and you can set your range. You don't have to do the math. You can pretty much see the price in Sol and set your range based on that.
something else I like to do when moving the volume to the bottom pane is also adding a moving average to the volume. It's kind of nice to see, how how the how the volume has been trending.
Yeah, there are some useful indicators. So I would suggest you to look into those. Fibonacci is also a nice tool that works surprisingly well because a lot of people use it. So you can find those price points with support. But even when you find the point where you want your range to end, I would extend it a bit further down, because these tokens usually dip more than you ever think they would. So if you're thinking, for example, here, LPing in this range from 3.1 to, for example, 1.5, I would extend the range to 1.0 or even lower, because they usually go lower than you expect. And when that happens and you have your position set correctly, you can make the most out of it by flipping your bid ask and selling the token as it goes up. By doing that, you're essentially getting your average entry down. So if you started here and the token dipped to this point, your average entry wouldn't be here. It would be somewhere closer to the bottom. So you would need a smaller pump to get out in profit than if you simply bought the token. That's why I like liquidity providing more than trading on these, because you can DCA in and get those fees on the way down.
Yeah,
Hey,
I really like that strategy of putting the bottom end of your range lower than you think the price is going to go. Because the other thing is when that happens, typically it happens on high volume, and you can capture a lot of fees as well.
Yeah,
guys,
pretty much when it dips out of range, it usually dips out of everyone's range, and there is too little liquidity concentrated in the zone. So you're capturing the most of liquidity with your provider liquidity, because everyone else concentrated their liquidity in a different zone.
Yeah, exactly.
hey guys, so just really quick, I've added Gosha in as a panelist, just if you are a Russian speaker and something's not clear for you, feel free to ask in the Q&A. He's here to help with any translation issues there. Just FYI.
Awesome.
Hey guys, I'm here for you to help you if you need any. I know there are some people who are here as I recommended bootcamp for you a lot of times. And if you have any questions, you can feel free to ask me in Q&A or in chat. Also, you can DM me on Discord as you wish. So yeah, that's it. Just know that I'm available.
Thank you.
Awesome. Thank you,
Thank you
Gosha.
so much.
Okay, so one thing that I wanted to show is when you're on the LMM pool page, when you go to add position, you have these bins. When you hover over them, it will show the liquidity per bin. So you can see where the liquidity is concentrated. And you can, for example, if you take a look at a wider range, so let's take 155. So you can see most of the liquidity is concentrated in this area. And then after it goes down, there is a lot less liquidity. So you can use this feature to decide on where you want to end your curve. So this is all USDC, but if this was a meme coin, I would extend my range maybe 30% below this. Because if you do bid ask, you would have most of your liquidity concentrated in here. So when the price dips to this area, you will have a lot of TVL in there, and you will capture a lot of fees because the price will be more volatile because of the smaller liquidity concentration. And usually after a dip, the price and volume goes up and volatility spikes. So those are the best times to LP the tokens after a pump or a dump.
So Mario, you want to see if you maybe find a position to open? Maybe we can, do a little bit of actual
waiting to see if there are any questions, but there are none. So
yeah,
we can set up some positions.
I think you've done well to cover the questions, and the team here's answering lots of questions in the Q&A, which is great. And please, everyone, use the Q&A feature. It's a lot easier, and then everyone can see all the questions there. Mario can scan and look at any questions in there. It's a lot better to use the Q&A feature than just to ask questions in the chat.
So as we can see, Bonk has been on a slight decline here. It did find some support here and pump back up, but the volume is not that great. So let's set up a position based on this. Even though I think it will pump, I like to go one-sided. Because when you buy the tokens on spot to go two-sided, if it keeps going down, your losses are compounding and the fees can't really overcome the losses. So I always like to go one-sided most of the times. So based on that, I would personally, in this case, go for the highest TVL pool, because the smaller bin step and the smaller fee wouldn't cover the range I want to do. So this is, by the way, you can choose your slippage, liquidity slippage. I like to keep that pretty high because when you're doing meme coins, the volatility is pretty high. I like to keep this at 10 or even 15%. It's not taking any money from you, like you won't be paying 15% more. It just means that if you're entering in this bin, the price can move 15% or whatever amount you put in there in each direction, and your position will still be created. If you use the default 1%, your transactions will most likely fail because the price keeps moving from one bin to the other. So that's what liquidity slippage is. You can find it in here. Priority fee, it's set pretty high as default. You can decrease this quite a bit. You can use 5 zeros and 1. Your transactions will land pretty much instantly, even with this amount. If you see that your transactions are slow, just delete 1 0 and see if that helps. So this is a number that I personally use. And the swap slippage is for swapping directly in the pool. I wouldn't recommend you to do that because you don't know if that's the best, the cheapest route. Sometimes there can be a pretty major price difference. For example, if there's no liquidity in the range and you swap, you can pay quite a bit because the price impact will be larger. So I would always recommend you to use Jupe for swaps. You have the Jupe icon on the bottom left of your screen. You can also use that and swap directly on the DLMM page. It's a pretty useful feature, but if you're doing something that's super volatile, I've noticed that this can be a bit slower. So I prefer to use the actual Jupe website. So let's set up a position here. As we can see, there's little to no TVL in this range, which is pretty good for us because the pool has a lot of TVL. So it will be there will be actual trades routed to it, but our liquidity will be more concentrated in here. So for example, I would like to cover this range with it. Let's do one position just to make it easier on us. By the way, position size is limited to 69 bins, no matter the bin step you use. That's a limit on Solana, but you can extend your range and create multiple positions. But if you use bid-ask strategy, it will create a sawtooth pattern and you have to do some math to make it right. So if you're creating multiple positions, just make sure they're doing what you want them to do.
Mario, the other thing I would add, one thing when you're doing one-sided like this, you may want to also check to see if you're going to be buying new bin arrays because that won't be refunded.
Yeah, usually when if you see there's no liquidity here, there is some. If you see no liquidity in a range, this can sometimes say 0.12 because you would have to pay a non-refundable fee, 0.07 SOL for bin array. That's basically the fee that you pay if you're the first one to put liquidity in that range. So you also have to, if you create a new pool, you have to pay for pool creation fee and you have to pay for 2 bin arrays, and that amount is not refunded. So if you want to create a new pool, just talk to us in Discord, see if anyone else wants to hop in. And it's usually a good idea to get a second opinion because sometimes the token might be a rug or something, and by sharing you're not losing anything because Meteora is truly PPP, and as you can see, no matter what the TVL is, where everyone is making money. So this right here, you can click on show price info and it will show you what you're paying for. So we're paying refundable rent for one position. That's always given back to you. And the transaction fee that you've set up. So that's all of the cost we have right now. So as you can see, we've set up a spot position now. Spot position has equal amount of SOL per every bin. Bid-ask has the most amount on the end of the curve, and curve is the opposite. It has the most liquidity at the start of the curve. So if you think the token will drop, you can use bid-ask as we've talked about, but you can also combine these strategies. You can, for example, we can do bid-ask now on top of our spot. So we'll have 2 SOL position, but it will be a mix of 50% bid-ask and 50% spot. And then if you see that the token is ranging, you can add another layer of curve on top of that and essentially make it a completely spot position. So you can combine these, and as price moves on, you can create some pretty weird looking curves that are pretty good with percentage of fees that you get, because you can set up one position that captures volume on a lot of different ranges, but you can also concentrate your liquidity in a tighter position, which we'll show right now. As we can see, this range has quite a bit of volume. So let's set up a position that would cover only a few bins, let's say 5 bins. Let's see how that does. We'll leave 2 bins on the right, just in case that we have some fees, so we can compound. You can always extend your position even if you're going one-sided. You can leave some space free. You don't have to add the token. And if you get the fees, it's usually a nice idea to add them in a bid ask, so you sell them at a higher price. So now we have these 2 positions. Let's wait for some volume.
Yeah, and if you leave that empty space out there, you really don't even need to do a bid ask. You could even, put your fees into a spot and you'll end up selling them at a higher price.
Yeah, pretty much. It depends on what you think the token will do. If you think it will pump, for example, if you wanted to buy bonk right now, I would rather go for something like this that's tight, and then simply wait for it to dip down. But if it ranges in this range, you will get quite a bit of fees because our liquidity is pretty concentrated here. As you can see, we have 0.2 sol per bin, even though our full position is 1 sol. And in our wider position with 2 sol, we have 0.016 sol per bin. So if you concentrate your liquidity, you get a lot more fees, but you also have to tend to the position a lot more, because if it goes out of range, your liquidity will be inactive and you won't get any of the fees. Also, autofill, if you're going one-sided, you want to disable that. Autofill, basically, it's useful if you're going two-sided and you put in the amount of token. Let's swap some sol for bonk now, actually. So we've just swapped 0.25 sol. So if we wanted to go two-sided, you enable autofill. You put in the amount that you want to put in, and it will autofill the other side. So it autofilled how much sol we need to put in on that side. It's also useful if you're going two-sided. I like to combine spot and bid ask as well. So I would do half of it in spot and create something like this. And then add a layer of bid ask as well as with autofill, so it fills equal amounts on both sides. So your curve would look something like this. This way, you're getting the fees in the full range, but you're also DCing out at a higher price with your bonk and buying more when the price dips. So it is a pretty useful tool when you nail the range perfectly. You can keep your positions open for quite a while, and the fees can actually be substantial. Sometimes they can print your initial deposit pretty fast if you're in early. One feature that was newly added, you can withdraw both bonk and sol. Here we can select the percentage, and we're withdrawing from the whole position. But now we also have one-sided withdrawals. So if we wanted, we can withdraw just our bonk. So what I like to do when I go one-sided, when it goes down into my range, I like to withdraw my token. So let's withdraw this bonk here. So as you can see, we've withdrawn our bonk, but our sol still stayed active in the range. So what I like to do is I add back my token fully in bid-ask. So I'm missing out on the fees in this area, but as soon as the price goes up a bit, I'm making a lot more profits because I bought those tokens for cheaper. This is one of the strategies that has been working pretty well for me, and I've noticed a pretty big increase in profits using it. So one-sided withdrawals are definitely a nice strategy to use. There's a question: what if I don't use autofill in two-sided position? You can put in whatever amount you want. So let's close our position. You can create a position and put in whatever amount you want. So we can put in 1 sol, and we can put in 940,000 bonks. So your curve will not look equal, but you can use any amount of liquidity you want. You don't have to use autofill. It's just to make it equal, make both sides equal. It's also pretty useful feature, but I personally prefer to do it manually because I like to customize my curves a bit more. And as I said, I usually always go one-sided, or I put in 20% on the top range and 80% on the bottom. So what I mean by that, if I'm going two-sided, I'm never bullish on the token too much because they, as we've seen, they more than likely dip. Pumps are not that often. So if I wanted to go two-sided here, I would only cover a small pump. I like to cover 10-15% upwards, and I like to cover 50% downwards price movement. So you can go two-sided, but not equal. So for example, we can use autofill here, and it's pretty useful in this case because it fills the curve perfectly. So this is something that I like to do. Just cover some upside, but cover more of it on the downside. Okay, so for DC out of bonk, the best is a bid-ask. Yes, if you're already holding the token and you want to sell it, the best way to do that is by doing a bid-ask with just the token. But also keep in mind, if you think the token will pump instantly, so if you thought that bonk will pump 10%, you will get more profits if you hold it, because the fees will not cover the losses that you get for selling the bonk for cheaper. Bid-ask is good when you buy the token and you do it in a pretty wide, like 20-30% range. So you get the fees even if it doesn't pump. So if it goes down, you will have some fees, but if it goes up, you're selling more. So if as I said, if you think the token will pump very fast, sometimes it's better to hold it on spot. But bid-ask is definitely a lot safer to do. Even though you get less profits, you also kind of have an insurance that you won't lose that much money either.
Yeah, I use this sort of strategy with Sol quite a bit, right? So if when the market's, not looking that great, there's not a lot of opportunities out there, rather than keeping my Sol inactive, I'll go, I'll look at where Sol's been trading, put some of it in a bid-ask, and then put some USDC bid-ask on the other side, right? So that way, if Sol drops, I'll DCA into it and then just swing trade it basically through the DLMM. So swing trading meaning as price goes down, I'm acquiring more of it, and then when I've acquired a bit of it, I'll flip it back the other way. So I'll remove it, put it back into a bid-ask, and then when Sol goes back up the other way, I'm selling more of it at a higher price than what I acquired it at.
Yeah, that's a pretty good strategy, especially when the market is choppy as it's been lately. So for example, we've been ranging from 140 to 160. So what I like to do is I put my Sol in a range from 140 to 160 in a bid-ask. So I was selling up to 160. Then when it hit 160, I flipped my bid-ask, and now I'm waiting for it to go down. So it's a pretty safe way. It doesn't get a lot of fees. But as I said, when the market is choppy, you can do this pretty often. Like sometimes it happens even twice or 3 times per week, and you're essentially making the fees plus a few dollars on every SOL you buy and sell. So it's definitely one of the least riskier strategies that produce pretty good results in a choppy market. I also wanted to cover the portfolio page. This is recently added. It shows all of your positions. Heavy Metal Cook has covered it yesterday, but we can showcase it again. It shows your total deposit. It shows you your dynamic pools, your DLMM pools, whatever you're in, you're currently providing liquidity in. So it's a pretty useful feature to bookmark this page on your wallet so you can easily access your positions. So please explain SOL USDC strategy for large and long-term investments. If you were doing this long-term, if you thought SOL would bump to, for let's say 250, I would set my range to cover that full price range. So, but you would need to go with something a bit wider. You should always check these pools on at least a weekly basis. Daily basis is ideal, and see which ones produce the best results. So I would put my SOL in the whole range, but I would concentrate a bit of liquidity in zones that are around round price. So let's say this range, because usually when the price is around, so 150, 160, 170, there is a lot of volatility and a lot of volume around there because those are usually the support areas. So I would allocate my liquidity in a way that it covers the whole range with bid-ask, for example, if I wanted to DCA out. But I would concentrate on every round number to capture on the fees gained.
So Mario, someone asked, why didn't you use the 50 bin step pool?
Yeah, I just wanted to cover that. So basically, the bin step in this case is not really relevant because the only downside is that you will have to set up multiple positions because 20 bin step will cover 2.5 times smaller range than the 50 bin step. So you will only be paying the rent on those positions, but that's all refundable. So if you can afford it, I would go for a tighter bin step because it would bring more volume. As you can see, the 20 bin, let's just check the liquidity distribution to be sure. Let's compare the 10 bin step and 20 bin step. Okay, actually, these are a different fee. Let's see if there are any same fee pools. So these two have 0.1%. Yeah, so this is 50 bin step, 0.1%. It has pretty concentrated liquidity in here. Are they similar? So this one has 10K per bin. This is the 50 bin pool. And it got 1.1 million almost in volume in the last 24 hours. And the tighter bin step, the 10 bin step, it has a lot less liquidity per bin, but it brought a lot more volume because the liquidity is a lot more concentrated. So you want to go for a pool that is relatively tight. It all depends on your range that you want to cover. If you wanted to cover a range of SOL to 250, you would have to go with something a bit wider, like 50, because otherwise you would have to pay rent on 50, 100 positions. So you want to go for something that's relatively tight, but that also has enough liquidity concentrated to get some larger trades routed. So the 24-hour fee per TVL is a pretty good base indicator, but you should always do some more research on this because it can sometimes be deceiving. For example, if someone pulls out a lot of liquidity, this number will go up, so it won't show the true state of the pool.
Hey, I was wondering if maybe this is Otto. Ahmed could give a little more context because it's a challenging question to answer. I think Mario did a great job, and I love how you redirected it to thinking about bin steps and fees intelligently. But just to take a step back for a second, this is market making. So if you're talking about long term, um, the idea with market making is to sort of be market neutral, and you're coming in and out and helping to make markets. And so I'm not sure how sophisticated a question, an answer you're kind of looking for with that question, because by definition, when you put your money into these pools, people will be trading it, and you can get exited out if Sol rips higher, for example, in the bins that Mario was looking at. So just keep that in mind.
So I see someone ask, can we do a position on meme coin? I want to know the best strategy for meme coins. So every meme coin is different. Each one is like there are multiple factors that affect the strategy for meme coins. So as I said, if you want to give it a try, if you've never done meme coins, when you want to do something, just tag us in Discord. We will help you out with it. But the strategy completely depends on the token. So on the volume, on who's promoting it, does it have a community? There is a lot of factors that you have to take into consideration, just as if you were trading it. So you're essentially trading the meme coin here. You're still buying it, but you don't want to go for something that's plain rug. If you find something that has a community behind it, maybe someone big shilling it, that's usually a nice token to LP. But as I said, the strategy completely depends on the circumstances. There are so many factors that you have to take into consideration.
Yeah, and the show off your curves channel in our Discord that's really the place for strategy discussion and whatnot. That's the best place for that. That's where all the DGens hang out.
So someone just said this was good yesterday. I missed it because I stopped doing LPs on weekends because I've got wrecked too many times on weekends. But yes, this does look like something that's good to LP. As you can see, the volume looks pretty organic. It has some spikes. As you can see, it has gone up, but this has been pretty good range. So for example, if you went in, this was 14 hours ago or so. If you went in here and you LP'd this range, so that's 50% or so range, you would be at your entry now. So one-sided position would have printed on this pretty well. It has done pretty okay volume. So this is an example of a token that could be taken into consideration for LPing. So there's a 5% base fee pool. It has generated 14,000 in fees, which is pretty good. By the way, when you're starting with 5% base pool, there's a factor called dynamic fee. Dynamic fee goes up when there's price action, when the price moves between bins. That's kind of the base how it works. So you will know when to move to a smaller fee pool when this dynamic fee goes to the base fee. So this one is 5.11 now. That means this pool is not capturing enough volume to increase the fee, which means that traders are looking for something a bit cheaper. So this is when you would want to move to a 2% base fee pool. and the dynamic fee on that one would most likely go to 3.6%. So when that goes to 2%, then it's time to go to 1%, and that's the basics of how it works. So you want to have the dynamic fee higher than the base fee. That means there's volume in the pool. So 5.1 means volume is there. It is more than 5, but in 5% pools, you really have to have the dynamic fee at 6% or more for it to be an indicator of organic volume through it. If it's 5.1, it means that it got some trades, but it's not getting enough to warrant that fee. Basically, you need a 5% price action to get any volume. So when the coin starts ranging in a tighter range, you want to go for something with less fees, smaller fee. Yeah, so new meme coins usually have it at 10% because they're so risky. People don't want to provide liquidity in it. So when it's at 10%, that's ideal. And also you don't want to, if you see a 5% base fee pool is doing good and has a dynamic fee at 7% or more, you shouldn't create another pool with smaller fee. Even though you might think that you will undercut the 5% pool, the liquidity will get spread out thin, and none of the pools will be profitable. So if you see a pool that's at 5% and that's doing good, just join it, increase the TVL in it, and don't set up a smaller base fee pool unless it's completely necessary. So another thing, launches on Meteora, they usually have a higher base fee. So they're pretty good opportunities to DLMM if you're interested. And the dynamic fee goes to 10% on those for the first hour or two. So they're extremely good if you want to dip your toes into meme coins. So someone is asking if someone holds 10% of supply and wants to sell it without major slippage, what strategy is recommended in such case? You should create for example, bid ask in a pretty wide range. For example, cover 30 to 50% range. That way, you're kind of assuring that you're not affecting the price too much, even though you're not getting price impact. Your position with 10% of the token is pretty big. So that will act kind of as a sell wall. If you put it all in one bin, there would have to be that amount of buy volume to go past it for the price to go up. So you should spread it over a larger range to sell a bit as the price goes up, so the price can keep going up. Basically, not concentrated too much. Yes, the dynamic fee is the total fee. It's not added to the base fee. Base fee is just the smallest fee that's charged on trades in that pool. But the dynamic fee is the actual fee that's charged. If TVL is less, then the transactions won't be routed through that pool. It all depends on where it's concentrated. You can have $1 million that's not in range, then that pool won't get any trades. So you want to have, as I said, it all depends. Each coin is different, but if you're seeing something get trades that are 3, 5, 10K, that means you need to join a pool that has enough liquidity per bin to cover those trades. Because if you spread your liquidity too thin, you won't get those larger trades routed.
Yeah, and just expanding on that, if you're in a pool and it's got low TVL, you know, and say you've got a great fee and all of that, you will get only the small trades, you know. So if someone, like he was just expanding, you're only going to get the little shrimp trades. You're not going to get any of the whale trades. Those will get routed somewhere else. So Jupiter, it's looking for the best price, but also the depth of that liquidity. So it's going to say, okay, maybe this pool's got the best price, but it doesn't have the liquidity available for the swap. So it's going to go to a different pool entirely. So, you know, there's a combination of factors of what Jupiter is going to pick to route the trade through your pool.
Yeah, usually those small liquidity pools will only get arbitrage trades. They won't get a lot of organic trades coming from Jupiter.
Okay, so someone asked what's the best strategy for a meme coin to meme coin pool, for example, Bobcat with. So meme coin to meme coin, those are pretty good, but it's good if you have conviction on both memes, and you would be fine holding any of them. So if you'd be, for example, let's take that Bobcat and Viv, you have to ask yourself if you would be okay holding either of those for long term if the price goes the way it shouldn't. If you're okay with that, they're pretty good because you're essentially pairing two volatile pairs. And I personally like to go for something like 2% or even 5% base pool because you're essentially trading and taking the base fee as profit on those trades. So if Bobcat went up 5%, it would be sold and bought with. Then if WIF goes up 5%, you would buy Bobcat back. So it's a pretty good way. I've tried it, and my results were pretty okay. I was getting 2 to 4% per day on my meme to meme pool, even with not a lot of volatility. So they're definitely a good option if you have conviction on both memes. So if we want to minimize the IL, we need to shorten the left. If you want to minimize the IL, it all depends on what you think the token would do. So if you want minimum amount of losses, the best way to do that is by going one-sided with just bid-ask. So you don't want to use any spot, any curve, just bid-ask, and then go wide. So cover the full range. For example, in this pool, that would mean something like this. So this way you're minimizing your IL because you will be buying little tokens when the price is high, and if it dips, you will buy more. But you really can't avoid losses. They're a part of this. They're a part of liquidity providing, and the key is to keep your losses small. So never put in, like, you need to set some rules. I don't like risking more than a few percent of my portfolio per position. So if you're starting with a small amount, set some rules and see how you can do. Good strategy for these is that people usually use is to double down when it goes out of range. But you're also doubling the risk you're taking. If it never goes back up, your losses will simply compound. So if you want to minimize your losses, just go wide, go bid-ask, and decide on when you will cut the losses. I don't like taking more than 20% loss on my positions. So I use that as a rule. If it goes down to 20% losses, I cut it. And it's been pretty good for me, but you need to set your personal rules and stick to them.
Hey, Mario, if you can scroll down just a little bit here and where it says Sol needed to create one positions, if you'll expand that price info. We touched on this in day one and today just a little bit. There was a question, any non-refundable fees relating to opening and closing positions? Generally on an existing pool, no. The only time that would happen, you know, say it's not a brand new pool, it's existed for a while. The only time that there would be a non-refundable fee is if you're having to create a new bin array. And that's only going to happen if you are depositing liquidity into an area that no one has ever deposited liquidity before in that specific pool. So it would have to generate the bin array that's, as you can see there on the screen, the 0.07 SOL. That's not refundable. And to expand on this, the reason why is because it's creating this on the blockchain itself. So there's a rent fee associated with that. Since neither pools or bin arrays can be destroyed, that's why you can't ever get that back. So use caution, pay attention to what this says. You can see here now, he's got it on the screen. Sol needed to create one position. That's 0.197. So when he closes this position, he's not going to get all of it back. He's only going to get the 0.5 when he closes the position, because that is actually destroyed on the blockchain when you close it. So that people get into trouble sometimes. They push buttons and then they're like, why did I get charged this much money? Well, this is why.
Yeah, and to expand a little bit more on that, if you're new to LPing, I would highly recommend don't create any new markets, right? Because especially if you're starting with small amounts, because when you create the new market, you will have to purchase new bin arrays, and and unless you really know what you're doing, you may not attract any volume in that market. So you end up spending all that money on bin arrays and never receive any volume, and you don't recoup that money. So I would recommend, when you're starting out, look at existing pools. Don't create new pools, because you'll end up spending SOL and you may never get that SOL back.
Yeah, there's over 7,000 DLLM pools today, and a lot of them are empty. And some of them are empty just because someone created a pool, didn't necessarily know what they were doing. They didn't create a good pool. It didn't get them any volume or whatever, or maybe they're like, oh no, I just spent a whole bunch of money. So yeah, understand how and when to create pools before you go and generate. And we're looking at maybe holding an advanced class in the future that actually covers some of that. But like Lad said, understand how to use a pool before creating your own.
So there's one thing that I would like to cover here. So as I said, the bin limit is 69. That's Solana bin limit. So when you're creating bid ask, you should be careful, because we can see that it will create two positions. They're both refundable, so that's all good. So if the curve looks like actual bid ask, so let's go ahead and create this. And now it created two positions, but it created one bid ask that ends at 119, and then it created another bid ask that starts there, but it starts with as a fresh bid ask. It doesn't start from the middle or wherever the curve ended. So our curve here ended at 0.0068 SOL, but we're starting here from 0.0003. So if you want to do a wider bid ask than 69 bins, you need to do some math and use this ending to put spot on the other position. So it does get a bit complicated. I'm sure this will get resolved in the future, but it's just one thing to keep in mind, because it creates a sawtooth pattern, and then your bid ask is not covering this area essentially. So there was a question, if we want to create a pool that already exists, same token, same bin, same fees, it seems that it's not possible, but sometimes this pool is desynced or dead. So yes, you can create two same pools. If it is out of sync, let's try to find one like that. Maybe this, when it has no liquidity in, it's usually out of sync. If you use Edge version of Meteora, the button to sync with Jupiter's price pops up, but your wallet has to be connected. You can click it and the price will get synced pretty much instantly, as long as there's no TVL locked. So the pool is now set up and it's at the correct price. If there is liquidity, this button won't pop up, but you can simply use for example, 0.01 Sol and some token in the current active range, put it in there, and do a swap in the pool to sync the price to the correct one.
Hey, Mario, can we go to the next slide real quick just to show people the graduation form? We want to explain that.
Yep, sure.
So yeah, there it is. And Mario, if you don't mind, the stable pool, so these are all the requirements and of the to graduate the form. So scan that QR code there. That'll take you to the form to fill out. You've got 1 week from today. I'm going to close these forms at 4 p.m. UTC, whatever that time translates into for you. That's when it's going to be closed. We're not accepting them after 1 week. You know, it's just got to be a volatile pool. No stables, no liquid stake Sol or anything like that. Yes, Sol USDC does count. You don't have to use a meme coin. You can be, but please be careful if you're not experienced. Be careful there because if you don't know what you're doing, you can get wrecked. If you don't pass, then you don't pass. There'll be opportunities in the future. But you use the Metlex IO app, choose the P&L tab, and paste your transaction there, and click the rocket. I think we got another slide to show that. But if you have trouble with it, reach out to us on Discord. Yeah, so right there. I don't know if you want to give more detail on that, Mario.
Yeah, sure. We can do a demo on that. So let's see which position we have some fees in. So this one, the tight one, got us some fees. So whenever you make a transaction in Meteora, this bubble pops up on the bottom left. So when we claim the fees, it will show you view transaction. You can click on that. You can copy the transaction ID or the link, and then you go to metlex.io. You go to the P&L tab right here. You paste your transaction link or ID. Click on the rocket, and it will do the math for you on your profits and losses for the position. If it shows negative, don't get worried straight away, because if you don't close your position, it's counting your initial deposit as negative. So we can see now. Let's close the position. By the way, when you withdraw and close position, the fees are automatically claimed, so you don't have to claim them separately. So we have now closed the position. We can click on view transaction, but we can also use the same transaction that we used before, because you can use either deposit, fee claim, or withdrawal from the same position, and it will work just as well. So we need to give it a bit of time to refresh, and it will update here. So it has updated now. It shows our deposit, our fees, and our withdrawals. So you can get your picture with your profits. You can download it, and that's what you can use for the graduation.
And if you will, go back to the slide with the QR code. So again, I hate reading from slides, but minimum $100 USD worth of assets. So it doesn't have to be USD. It could be any two assets. It must be at least 1 hour long. You must obtain a positive profit and loss. It must be a new position. So starting from today, you cannot use a position from, last week or even yesterday. No. No stables, and that's it. If you don't graduate, you'll still retain the trainee role if you submitted for that 1 week from today. Forms close at 4 p.m. UTC. So hopefully that answers all the questions on that. If there are any others, feel free to ask, but hopefully we've made this clear.
So there's a question, why would they use the swap on the UI instead of using Jupyter? The UI on Meteora, the swap on there, it's useful for when you want to do a quick swap. If you're in a meme coin, time is essential. So this button is pretty useful for getting out of position quickly if you think it will dump, or to simply get the token fast for going two-sided. That's why I like using it. But keep in mind, it also has its own liquidity slippage and slippage settings. So you should increase these if you're doing meme coins, because 0.5% default won't really make it.
Love the one-sided withdrawal for this, for cutting part of your workflow out.
Yeah, one-sided withdrawals are really a game changer now.
So one other thing I want to add to this is, so this form, yesterday's form, and I just posted yesterday's form in the chat, the link to that's to get the bootcamp training. This particular one, this is your graduation to get LP Army Private. There is a difference between LP Army Private and LP Army. LP Army is a role that, like, you can't apply for it. It's like an honor given to those who give out meaningful contributions to the community. You're in there, in the Discord, you're active, you're helpful, maybe you give out, like, for example, Alex, whenever he made his tool there, he was given the role of LP Army. So anybody who's regular LP Army, those are people that have been around, for a while, and they definitely know what they're doing. So that's the difference between the two. And yes, someone asked if there'll be certificates. Yes, there's supposed to be NFT certificates. We will get those out. Bootcamp instructors don't do that. The team does. We'll get all that sent over. Again, no roles will be handed out until after the forms close, and we have to process everything, and then we'll get everything over to the team to issue those NFTs. We're actually behind from last time, but I'm going to get those over to them soon.
Yeah, so there's a question, what's the difference between Edge, Meteor, and the app? Edge has the newest features, so their first rollout to Edge. They can be sometimes in beta, so they can be not working properly. But so far it's been so good, pretty good. If you want to get those features early, you can use Edge. And sometimes when either of them has issues, for example, I've sometimes had issues with creating positions on app version. When I go to Edge, that issue is resolved. So it's nice to have them both there. Feel free to give it a try.
So, Ruslan's asking about the hawk site simulation tool, on the DeFi God mode. Asking how pros use that to do position simulations. Honestly, I don't think pros really use that. It's too simplistic, because basically what the hawk site simulation tool is simulating what the hawk site service would do with a position. And right now, it only does spots, and whenever it goes out of range, it's going to create a new spot, and it's going to do a 50-50. So it'll swap the token that it needs to swap to get into a new 50-50 position. And I think the way Hawksite currently works is much more simplistic than the sorts of strategies that Mario's implementing. So to be honest, I don't think pros are using that tool to do any sort of simulation.
Yeah, I don't think I've ever used it, to be honest, but if it helps you personally, I don't see why you wouldn't use it. So for the form, if you need some help filling it, this is the info that you need to fill, your Discord display name. This is your Discord username. You enter it in the first field. The second one is the email address used for bootcamp registration. Then there's your Twitter handle. You don't have to input this one. You also need to provide your wallet address for the certificate in the future, and your transaction from Metlex P&L. So let's demo that. For example, for our transaction, this would be the link that you copy by clicking on here. So you can paste it in here in this field, and your initial transaction. You can find that by going to your wallet and finding it. But let me just copy my wallet address and go to Soul Scan. If you go to DeFi activities, I think Heavy Metal covered it yesterday. It's a pretty useful feature to see what you've done. You can see when you've added liquidity, when you removed it, and you can go back in time and see your P&L for these if you haven't already. So your initial transaction will be when you first added liquidity. So for example, this right here, we've added one-sided liquidity. If this is the position that we want to submit for the bootcamp, you would copy the transaction ID and paste that in the field. You can also copy the link and paste it in the last field. So this is all that's needed to get your LP Army private role.
So Ruslan's talking about using lending strategies along with Meteora, and they say that they hold their SOL long term as collateral on a lending platform and then borrow USDC against it, and then DCA into SOL with their USDC. So that definitely can be an interesting strategy. I don't know, Mario, if you were planning on maybe discussing
Yeah,
any of that or not.
definitely can, but I think it's a bit too much for beginners. So hopefully when you have the advanced bootcamp, we can cover more of those. So if you have suggestions on that, if you want us to cover some more advanced strategies, techniques, feel free to give your suggestions in the Discord. We will happily develop content for it and try to teach you how to do them. So make sure to give your feedback on the bootcamp if you liked it, what you didn't like, what we could improve, and stuff like that. So I just wanted to cover one more thing. There's a button to claim all fees. This basically claims the fees for all of your positions in the current pool. So if you have multiple positions, it's pretty useful feature. It claims the fees on all of your positions, but we right now don't have any fees here because Bonk has actually went up instead of down. So it never got into a range. So if you have multiple positions, it's a pretty useful feature.
And some people are asking, when the advanced boot camp. We're working on it. Don't have a date set yet. Got a lot of things in planning. I mean, one of our first steps is to make sure that we have a regular boot camp, monthly. We're going to see about adding some more things. I don't want to give out too much alpha here, but there's a lot of things cooking. We're working towards doing some more advanced classes, a little bit shorter time, not 2 days. possibly even doing this in other languages, so on and so forth. But and we're really trying to grow the boot camps here. We still have 20 minutes, so Mario, I don't know if there's any other things, questions here that want to be asked
Yeah,
or
there's still a few
answered.
questions. So there's a question how to find your fee claims. Your fee claims are not in DeFi activities, they're in transfers. So you have to find them there. But you can use the position creation transaction for all of your P&L checks. And also someone asked if you can see all of your transactions in P&L. We can actually showcase GeekLad's tool. Let me just find the link.
Yeah, and I just pushed an update for the one-sided liquidity. So now it'll properly handle one-sided liquidity withdrawals.
So this is the tool that's made by GeekLad. You input your wallet address or position address, and it will do the math for you. It will show you a chart of your P&L. It's pretty good. I love it because of the chart. Yeah, so the links to all of these tools are on Meteora Discord. I'll link this one as well. But you can find all of the tools in Meteora Discord. So as you can see your graph, your profit per token. It will show all of your DLMMs. It will show how much exactly you profited on them, your divergence loss. So it's a very useful feature, a very useful tool to track your progress and to see if you're improving your skills, if it's worth chasing the meme coins, if you see your curve going up. Even though sometimes you might think you're not doing good, if the numbers say otherwise, you should just stay on the track and keep improving your skills.
Just remind you guys, we did put out some additional resources. That was, let me see if I can pull up that for you guys and paste that in the chat here. Your bootcamp resources, we shared this yesterday. Let's see, share. These resources won't include links for the roles. Feel free to make a copy, but it guides you to some of the tools, and also places where you can find other tools and resources for further reading, explanations, understanding. But like GeekLad's profit analysis tool and Metlex.io, that stuff's all in there, as well as a few other things. Mario, if there's time, do you want to show Sonar Watch and LP for fun as like showing the portfolio or dashboards?
Sure, we can do that. Can someone base their wallet that has some activity, because this one has no activity? If someone wants,
Or I mean, I
to be
can do it.
showcased. Yeah, perfect.
Yeah, give me a second here. One second.
We got one
Okay.
in the chat. So
All right,
let's
great.
see. So this is LP for fun .versal.app. It's also a community-made tool by MadXbug. I use it pretty often. It shows all of your open positions in one place. You can highlight those positions. If you have multiple, you can highlight multiple and click on View Analytics. Basically, this screen shows you the pool settings, if you're in range or not. how much of fees you claim, what's your liquidity, when was it last updated. The analytics show a bit more. So let it load up. It shows you analytics per position. So you can do multiple, it will show them all grouped up. No, this one can be for open positions. It only tracks open positions, so that's why it's pretty useful. You can quickly take a glance and see if your positions are doing good, if they're in range, and if you need to adjust something, you can go to your portfolio page. So this is the summary you get. You get the current value, you get how much you put in, you get how much you've taken out. By the way, this is if you withdraw and put liquidity back in the same position, it will count it as invested. It shows your profit, profit in percentage, how long that's been active for, and you can change it to USD or the token that you're LPing with, that you paired your SOL with. So it's a pretty useful tool to use. As for Sonar Watch, it also shows you quite a bit of info. You should definitely take a look at it. It shows your portfolio. It shows you your open positions. It should show them.
I might have a little bit better one to show.
Oh, which one is it?
Well, here, let me just, I've already got it up. 1 second.
Yeah, Sonar Watch is really nice if you do a lot of DeFi, you're using a lot of different protocols, a lot of different dApps, you forget where the hell you even have your money.
Yeah.
Sonar
Yeah.
Watch is really good to see where you have everything invested.
Yeah, this will go across, everything. So you can see here, like, here's just stuff that's in this particular wallet. And then here, Meteora, you can see here this asset. It's sitting in this dynamic pool. Here this is a DLM, and you see here, it says right here, DLMM here. It doesn't say anything right here. So that's a dynamic pool. So we got a couple dynamic pools open there. If you have anything in the vault, it'll, like I said, it'll show that it's in a vault. But even like down here, I've got a couple tokens out here on save.finance. It's just money that I've lent out. So, but if you had, say, like one time, it wasn't that long ago, it was long after I had quit Radium. I opened up this and I found a pool that I had completely forgotten about on Radium, like it was an old render pool. And I was like, oh crap, I had like $800 just sitting over there doing nothing. So this is a great way to find your stuff and see everything in one place.
It also supports airdrops. So if you have
Yeah.
an airdrop and you didn't know you had the airdrop, it's a good place to see where you've got airdrops as well. If you're earning points on different platforms, I think they also support points on various platforms like Camino and such.
It will not show MET points.
Yeah, they don't support MET points.
Yeah, you can see, this is a fairly new wallet. So, I'm not eligible for most things or anything here, but if I was, there would be like a place you can go claim, it'll link straight to it. Handy tool. And you can even like save wallets. So if you have multiple wallets, you've got an address book that you can save a lot of stuff to. And this is not unique to Solana. You can check all kinds of stuff. Anyway.
So I
Yeah, and you can also create like
shown...
sort of like groups. So if you've got a bunch of wallets, you can create a group for those wallets and then see everything for all of the wallets in one shot.
Yeah, I don't think we've shown Rock Check and Bubble Maps this time. So can you guys see my screen now, just to confirm?
Yeah.
Okay, awesome. So basically, Rock Check and Bubble Maps are pretty good tools to use when you're checking out new tokens. You basically copy the token address and paste it in, it will give you the basic info. So it will show you if mint is on, what's the supply, mint authority, is LP locked. For example, this one shows like it is all good. And as you can see, it has that fake volume. So Bubble Maps is another great tool. You also paste the token address, and if we check the same token, we can see some clusters of wallets that hold a pretty significant amount of supply. If you click on one of the wallets, it will show you the percentage of supply that cluster holds. Basically, these are wallets that are linked together. So usually these devs, when they do rugs, they use one wallet and distribute it to multiple smaller wallets so they don't show up in top holders. So these two tools are pretty good to, you know, get a quick understanding on what's going on. If you see these clusters, it usually means the token is not good. But if there are some small clusters, like for example this one, that can be okay, because it can be someone that bought some token and sent it to their cold wallet or something like that. But you want to avoid clusters like this one.
Yeah, Soul Sniffer is another good tool that someone mentioned in the chat.
I don't think I've ever used it.
So they do a lot of the same sort of checks that rug check also does.
Yeah, pretty much. But it kind of incorporates both rug check and bubble maps in the same page. So it is definitely a nice tool.
Yeah.
So someone is asking, is there a way to figure out what profit and loss is before you close the position? Well, you can use the LP for fun page. It will show you approximate of your profit or loss.
And then my tool will show you as well.
Oh, does it support open positions as well?
Yeah, it supports open positions.
Oh, nice. Yeah, that's new then.
Just a few minutes left. If you got any questions, now's the time.
We don't talk about med points here. Yeah, that's kind of true. I think most of us LPers started because of those points, but when we saw the potential of Meteora, we stayed for the profits. So if you're here to farm the airdrop, feel free to join our community. And I'm pretty sure if you keep doing it, that you'll start farming money and you'll see airdrop as a potential bonus, as a gift in the future.
Amanda, you asked, please add euro as currency choice. I'm from Europe. Are you just talking about as far as in pools? because if that's what you're talking about, like in the pools that are available, well, people create the pools based off of what's trading, what people want to swap for. And a lot of that is simply Sol or USDC. Um, some not quite as much as USDT, but that also happens. And so you can create a pool, or someone can create a pool uh, using any pair. Um, whether or not you get any action on it, that's that's dependent upon the market. Um,
I think they mean they want to see, instead of seeing things denominated in USD, they want to see it
okay,
denominated in euros.
I see.
Okay,
Well,
so Link the Beast has a question. Does it have to be in one position? Yes, the 100 USD has to be one position, but it can be spread through multiple bins. One position covers multiple bins. As we've covered, 69 bins is the limit. You can choose whatever amount of bins you want for your position. And also Mark is asking what happens to my spot tokens when I open a meme coin pair like with Mumu. If I open a spot position, how am I earning fees out of it? So if you open a meme coin to meme coin pair, essentially if one pumps and the other one stays at the current price or it dips, you will end up holding a bag of one token. So it's essentially the same as if you were LPing with Sol meme coin. So if one pumps too much while the other one doesn't, you will end up with a bag of that one token. But if they're trending in a similar way, I think WIF and Mumu are together with Sol. If they're trending up with Sol, it's a very good play to pair two meme coins that you have conviction in, because you're getting fees in both WIF and Mumu as the trades happen, and they're both appreciating in USD value.
And then the opposite can happen too, right? If both tokens are being devalued versus USD, you may stay in range and you may get fees, but it may not be enough to overcome the drop in price versus USD in both tokens.
Yeah, so that's a strategy if you have conviction for in both meme coins. So that's the only time I would suggest this. And I think in bear market that will be extremely viable strategy, because you're essentially printing both meme coins for pretty much free if you're okay holding them both.
all right. Well, we're
So
let down. What?
we did get one more question I saw in chat, kind of interesting. Well, I guess Mario, you answered about the covering more than, if the price range covers more than 69 bins, is it better to go to a pool with a larger bin step or make multiple positions?
It depends on what you want to do. I
Yeah.
personally would prefer to go with a bit wider bin step if it's not too wide, but as we've said, tighter bin step gets more volume in most cases. So it's worth taking the time to set up your positions right. It will pay off in the end.
Yeah. Yeah, those smaller bin step pools, they can capture more up and down activity, right? So, if you're in a high bin step pool, but the volume is taking place within a tighter range, and that, the bin step is too large to cover that range, the smaller bin step pools are going to capture more volume and capture more fees. But the disadvantage of the smaller bin step pools is that it's very difficult to manage a bid-ask strategy or a curve strategy because you're having to do it over multiple positions. So, if you do a lot of bid-ask strategy, it's better to do the higher bin step pools, because then, as Mario demonstrated earlier, you don't have to deal with trying to do math and combine spot and bid-ask positions to get everything to the proper shape.
So Ruslan is asking how to find stuff really, really early. That's something that we won't cover in this bootcamp because that's extremely risky. Because if you want to be very, very early, you have to buy in when nobody else is or a few people are. And that usually means very low market cap. That's okay if you're trading meme coins. But if you're into doing liquidity providing, you don't want to take that high risks. So you can see on Metlex page, he has added top 50 meme coin dynamic pools. So you can use this to judge the volume these coins are getting, and new Meteora launches do pop up in here. And as we've said, this tool for top 100 DLMM pools is also very good to find some good plays. If you want to be the first one to provide liquidity for a pair, keep in mind that you're taking maybe 10 times more risk than someone who's getting in after a day of the meme launch. So the risk is pretty big in the beginning, but so are the rewards. So just keep that in consideration.
Okay, guys, we're actually a minute over. So I would recommend, if you've got any further questions, please join us out there on Discord. I'll just show that link here. If you're not already in the Discord, please join us. Come be a part of our community. We thank you for joining here today. We're gonna end it, maybe play a little music on the out. Thanks again for joining. Thank you all for instructors for joining in, helping in, answering all the questions, and for being awesome. Rock on.
Bootcamp is about to begin. Rise up, it's time to log in. LP Army will teach you the way to be LP warrior starting this day. We live for the fees we make. Soon it is profits that you will take. The LP Army marches strong. The best in soul, and now we sing our song. We live for the fees we make. Soon it is profits that you will take. The LP Army marches strong. The best in soul, and now we sing our song. We are LP Army, rise to the sky. Dynamic fees, our battle cry. LP warriors will never die. Thereupon we will fly. Rise, new soldiers, rise. Rise, new soldiers, rise. Spot, copy, ask, use them all. Winning's the task, we heed the call. Bootcamp, join our ranks so tight. Listen to the Goose Gang and gain your might. We will print and we will earn. Points to gain as tokens burn. Join the ranks of the brave and bold. Story of the LP Army told. We are LP Army, rise to the sky. Dynamic fees, our battle cry. LP warriors will never die. Thereupon we will fly. Rise, new soldiers, rise. Rise. Take the course and earn your role. March with us and earn some soul. Dodge the rug and join the fight. We gain together LP Army might. Make your position and join the pool. Post your wings with Alex's tool. LP Army, we fight to win. Your journey is about to begin. We are LP Army, rise to the sky. Dynamic fees, our battle cry. LP warriors will never die. Thereupon we will fly.
Thanks, guys. See ya.
Have a good one.